My name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about unused RRSP contribution room. So we had a viewer last week actually send a comment in talking about or asking about, I have unused RRSP contribution room. How do I use that? What are the limits around that? So I just want to run through the comment that he left and then actually break down his questions, go through those answers. And the reason why we grabbed this comment and are doing a video on it is because I think a lot of you watching this have RRSP contribution room. Okay, so a lot of you get to retirement with room in your RRSP contribution. You just haven't used it, and once you retire, if you have no income, it doesn't make a whole lot of sense to do that, both because you have maybe little to no income and just for tax planning purposes, right? So I think we want to make sure that we're focusing leading up to retirement, whether you're 20, 40, or maybe even 60, early 60s, and not yet in retirement. Maybe you have a good income. We want to make sure we're using our RRSP contribution room. It is a great way to save on taxes. Now, there's obviously some thresholds that we want to look at as far as when it makes sense to do an RRSP and when it doesn't make sense to do an RRSP. But I think for a lot of you watching this video, I know most of our viewers here are kind of 45 plus. If you're under 45 and watching this video, thank you for tuning in. And this still applies to you. You still need to start using your RRSP contribution room. Let that money compound. One big benefit with an RRSP is that the money grows tax deferred. Okay, so all the gains that you have in there, you don't pay tax till you pull it out, which a lot of you complain about, but it grows tax deferred in the meantime. So if you're young, start saving into an RRSP. If you're a bit older, getting closer to retirement, and you have some RRSP contribution room, we want to look at how to use that. Where are those thresholds and when does it make sense? So the comment is from Dan Butler, and he says, we would really like to see an episode dealing with unused contribution room in your RRSP. A scenario could be if you have accumulated, say, $50,000 in unused room over the years in your RRSP. Can you make a $50,000 contribution plus your tax year's RRSP amount into your RRSP? In other words, if you make $100,000, can you make it appear that you made $32,000 for the tax year? So $100,000 that you made minus the $50,000 in unused RRSP contribution room, plus you get 18% of your income for that year, so another $18,000, which would write his income down to $32,000. What is the best threshold amount to take your income to for the tax year? Again, thanks for the YouTube channel. So Dan, thank you so much for leaving the comment, for piping in on this. I think it's a great comment. Okay, so if you have, let's take this scenario. Let's say Dan has $50,000 in unused RRSP contribution room. And let's say he's getting close to retirement. He's making $100,000 a year, so he has a nice income. He's paying a lot of taxes. How do we utilize that? Okay, so there's going to be a couple ways that we cut this. So if I was working with Dan, I would say, how many years to retirement? Are we talking 1 year, 2 year, 3 year, maybe 10 years? Okay, if Dan came back to me and said 1 year, I would say, okay, well, let's actually look at the tax rates in your province or territory. So I'm going to use provincial tax rates in BC because that's where I live. But jump online, we'll put an income tax calculator below. Just jump online and see where the thresholds are for you. So in general terms, and I've said this in other videos, an RRSP makes sense if you make above 50,000 and not if you make below 50,000. That's kind of a general rule. So let's say for Dan, he's making $100,000. He's working in BC. My threshold is that 50,000 mark. So there's a big jump rate in BC when you go from, it's right around that $48,000, $49,000. So let's call it $50,000. It goes from 22% to 28%. So that's the big jump. Okay. So we want to get his income down to $50,000. So if he's got 1 year to retirement, then I would say to him, look, Dan, I know you have 100,000 in income, 50,000 unused, plus you're going to get more this year as you build it up, another 18,000. But I think we should only do 50,000 to your RRSP because below that, we're only getting a 22% tax break versus a 28% tax break. So in Dan's case, if he only had 1 year left to retirement, we would use 50,000 and he would enter retirement with 18,000 of unused RRSP contribution room. Okay. Now, that's not the worst case. I like to use RRSP contribution room before someone retires, but because he only had 1 year left before he came to me, we're going to plan how we plan. The reason why we leave the rest of the 18,000 is because if we put it in, we're only getting a 22% tax break on that. And in retirement, that's probably going to be around his tax break when he pulls it out. So there's not a huge benefit going in, going out. It's a wash. and you got to pay tax on the growth, we'd look at a tax-free savings account or another tool for that. Now let's take Dan's same scenario, same question. So 100,000 of income, 50,000 unused, and he's going to generate another 18,000 of RSP contribution room this year. Okay. So what we would do is it's kind of the same process. So the first year we would write him down to $50,000. Okay. There's really a big tax rate jump in BC anyway, when you hit 50,000 and then right around 98,000. So those are like the two big jumps. Anywhere between there, it's incrementally increases, but there's not a huge increase. So I'd be comfortable saying, hey, Dan, this year put 50,000 into your RSP. Next year, you're working again, making 100,000. You can use your 18 that you didn't use this year, plus your 18 next year. So you're going to do 36,000 the following year. And the year after that, you're going to earn another 18,000, which you could do then. So kind of make it up over 2 years versus, leaving some into retirement. You could spread that out a bit more. If, let's say Dan has 3 years to retirement. He could basically use his 18,000 that he earns every year, plus take that 50,000 and divide it into 3. Depends on how much cash he has, budgeting, all that kind of stuff. So definitely 50,000, if you've got a few years, I would look to use that leading up to retirement. Again, you need to look at your overall financial picture. If in retirement, you have 2 pension plans and your wife has a pension plan, you got lots of money coming in, you may be in a high tax bracket already. So, you got to pay attention to that too. Again, that is not the norm, but we do run into it once in a while. We did a plan for someone the other day where they had 4 pension plans between the 2 of them. So they have a lot of taxable income, guaranteed income. Maybe that RSP doesn't make sense in some scenarios, but for the majority of you watching this video, if you have some unused RSP contribution room, look at your tax rate. There'll be somewhere where there's a big bump. Again, in BC, it's right around that $48,000, $49,000. Goes from 22 to 28%. To me, that's a big enough bump to say, yeah, let's do it up to that point, but not under that point, because most of you will fall in under that $50,000 in taxable income in retirement. So the idea with an RSP, put the money in a high tax bracket, take it out in a lower tax bracket. Now I want to go through one more scenario for Dan. So let's say Dan came to me again, same scenario, I won't run through it again, but Dan also said, look, I have a rental property. I've had some gains on there and I know I want to sell this in retirement. Okay. What we would look at doing is building out a plan where we actually save that 50,000 RSP contribution room. So Dan would do the 18,000 every year, the amount that he earns, but the unused room that he's kind of carried forward, we would save that for in retirement, or at least for down the road, for when he sells his rental property. Now, there's a few catches to this. He would have to sell his rental property before he turns 71, okay? So the money would need to go into an RSP. But part of that, if he said, I was planning on selling it at 75, we could run the numbers and show him, look, you can't use RSP room. Here's how much tax you would have to pay. If it still made sense within your overall plan, could we sell it a bit, a few years earlier so that we can use an RSP contribution room to reduce the tax bill? That would be massively advantageous, and a lot of our clients will do that. So we'll plan, use their unused contribution room. They sell a rental property or 2 or 3 down in retirement. Most of you watching this video, if you have a rental property, you will want to get rid of it at some point in kind of early to mid retirement. So in your go-go phase, sure, you can have the rental property, you have more energy, your go. In the slow go, the last thing you want to deal with is tenants. So we do find that most of our clients, unload their rental properties either early or, fairly early into retirement. So not a lot of you are carrying rental properties into your 80s and 90s. So just something to keep in mind. If you have rental properties, you plan to sell them, early or mid into retirement, before 71, so you can use RSP contribution room. Consider saving some contribution room. We have a lot of clients that do that. It works very well. It saves a lot on taxes, and it's just a great tax tool to have when you enter into retirement and have a big taxable income coming. Because remember, if you sell a rental property in retirement, you're going to have a huge tax bill potential. I mean, if you've owned the property for a bit and you have a good gain, it's going to be a taxable gain, a capital gain. Okay. What that could do is claw back your OAS. So if you have RSP contribution room, that could reduce or eliminate that OAS clawback. So Dan, hopefully that helped you out, and all the other viewers out there. I know a lot of you fall into this situation. So again, if you have 1 year left to retirement, you're going to want to use around 50,000 of that. You also want to look at what your income is in retirement. If you know you're going to have a very large income in retirement through pensions and other things, then you may want to reconsider. But for most of you, use up that RSP to kind of that buffer point around 50,000 for most provinces and territories in Canada. Use that RSP room as best you can. Or again, if you have a rental property or you have a big tax bill at some point in 1 year or 2 years in retirement, you can save that for your retirement years. So thanks for tuning into the video today. Hopefully it helped you. If you're enjoying these videos, hit the subscribe button below, the like button below. And if you have questions or if you have ideas for videos that we could roll out, leave a comment below. We'll add it to the list. If it makes a lot of sense as far as, it hits a lot of our viewers, we'll pump it out right away, just like we did for Dan here. So again, thanks for viewing. We'll see you in the next one.